Good morning, everyone. My name is Anne Marie Band. Today's Tuesday, September the 19th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We did start the FOMC meeting today. Tomorrow, the release will come. In terms of what's going to come through the pike or down the stream, we've got building permits, housing starts, Red Book, 20-year bond auction, and the API is going to come out with crude this afternoon, but that's, basically about it. We've also got some earnings on the horizon that are a little interesting. We'll just have to see what's going on from there. So let's take a look at the SPY. We've got the quarterly outlook here. We can see that we are in a little bit of a doji pattern. Price action really trying to hold up over this edge. I think that's going to be a very important close to September if it stays above this area and begins to widen up. If not, this could be a little bit of a topping formation. We'll have to see. Let's take a look at a monthly. Monthly shows a little bit of retracement. Certainly, we've got price action showing some fading, right? And so let's think about this, right? We had up, and then from the low high, we had a lower high and a lower low. And now we have a lower high at this point, but we're still inside of the range. Again, this number here is very sticky. 443, I talked about it yesterday. It's going to be the same one today. In terms of a deep support zone, okay? So if we take a look at the week, we can see that what we are in the midst of is a little bit of mean reversion, right? I would not be surprised to see us chop around here. Expect a tremendous amount of volatility on these days that have FOMC releases. So tomorrow we're gonna sit on our hands unless we decide we're going to go long some strategies, but that is really going to depend on how much volatility is packed into the charts. It's getting very expensive to buy options straight out. If we take a look at the daily here, what we can see is the following. We had an upward draft here, and then again, traders trying to hold up here, but just getting forced down. Tons of supply coming in here and pushing folks down to a lower region. And then here we break the support with a fair bit of savagery and then pop right back up. So what does it tell us? It tells us, folks, that we are in a range, and that range is going to give us premium opportunities to buy on the low and premium opportunities to sell on the high. Here's the rub. Because the longer time frames are trending up, there is a chance that selling short here will be troublesome. So what we want to do is make sure that we are very patient coming into the top of the range and not shorting anywhere down in this noise. If it comes to you, amazing, great trade. If it doesn't come to you, oh well, the buffet is open, something else will come around, all right? So 443, number to look at, to hold today. If it loses it, we track down, and then we look for the floor to hold the bottom again. On the upside, we're looking all the way at, 451, 452. Could we have a nothing burger today? Of course. Any day could be a nothing burger, really. Let's take a look at the quarterly for the Qs. Same sort of thing. Same sort of thing. And so what we are staring down here is a chart that's really trying to find its way. Is it fading like the others? Yeah, it is. It is. It looks just like the SPY, trying to hold this breakout zone. From the weekly pattern, we gap down, and we are trying to hold up. Notice this is the close of last week. If we can get up over 371 and stay there, we've got ourselves a good shot at upside pressure. So here's the thing. Big down day, right? Gapped up, faded, recaptured the gap on the close, and then closed in a doji. Okay? Today, here's what we're looking at. Can we hold above the close of the prior day? The close of the prior day is 370.92. If we cannot hold above that area, this region at 369.77 is going to sort of put a little floor in for us, but because of this lower dip, it could fade again. So remember the storyboard. How do we know a chart's going to move to the upside? 1, it fails to hold lower. 2, it breaks frontline resistance. So this was old support. It got broken, so it becomes resistance. So this is the number it has to hold. This 371-ish area, 370.90. If it pulls back, we stand out of the way. If we're looking for the long, we stand out of the way. We watch it come in, make a higher low. That means it's got to close this candle today that's coming up. We have to close it and not lose 369.50, 369.20, something like that. Just so long as we hold this low. And then the very next day, as long as that happens, we buy the next open of the candlestick, and then this area becomes the floor of support, and we can watch it go up. Who's going to trade in here? Everybody. The buyers and sellers are the same people right now. Why? Because they're trading a range. They're going to buy on the bottom, they're going to turn right around, they're going to sell at the top. Until the range breaks, buyers and sellers are the same people, and that means there's no real edge to market flow. Let's look at the IWM. There are a lot of people short the IWM right now. As you may recall, I was talking about this being in a very sideways slosh for quite some time. And look what happened. It came up to the edge here near this 200 area, and it has sold off quite dramatically. It's inside of the last quarter's motion. So what do traders want to do here? Well, buyers want to make sure that it holds 178.16. If they are trying to pick a bottom here, I don't know that they're going to do a very good job. But they're going to wait down here at this 178 area. And at this point, that's where they're going to try and come in to see that hold. So by default, that means we probably see another $3 of motion to the downside here, right? Take a look at what's going on. Let's see how it is on the monthly. Yeah, right? We're coming down into these spaces right around here. That is my suspicion. Okay, so now taking a look at this, we've got this bottoming edge, negative slope, negative Keltner band. So that means, hey, buyers are going to come in here, but the buyers are going to turn into sellers as soon as it bounces up into this region where there's a ton of supply, where everybody's going to go, sure, I'll sell you mine. So that's what I would be looking for in that space. Any bounces to be sell zones. Could it fall completely off a cliff? Yes. Could it bounce? Yes, because that's what the traders are doing. They're doing both. They're holding the floor, trying to push up, and then rotating down. If it loses this 182.40-ish area today, watch for it on a tight time frame to push up and then fade. The big thing that's on everybody's mind is oil. Let's use the USO. Today I'm doing an ETF roundup. Listen, oil is running really fast, really hot, and that's because everybody's piling in. When everybody piles in, there gets to be a little bit of a problem, okay? And a trade can get crowded very, very quickly. And so what I am noticing is the battle of new shorts coming in because they're thinking to themselves, this trade looks like it's pretty crowded. And then they're trying to short it, but then it's still holding the floor. This has moved a tremendous amount. I expect for it to fade, but at the end of the day, this is really a lot of upside pressure on the horizon until and if we fall into some kind of dramatic recession. All right? And at that point, I still think oil comes back because we've had some preposterous energy thoughts for the last decade. So that's it for the day. We want to watch the dollar. The dollar and the markets have been really moving quite a bit. Let me do the ES because I love it so. If the dollar fades, which it should right now because a lot of people are finally going, oh my gosh, I really shouldn't have been short the dollar. I better go long the dollar. And of course, they're at the top of the range, and so they're going to be wrong, and it's going to fade because that's what people do. They do the wrong things most of the time when it comes to trading because it hurts. It's nerve-wracking to make the right position trade over the long haul. So what we are looking at today is something that is probably going to be affected by dollar motion, and the dollar's fading, so we should see a little bit of a lift into resistance zones. That resistance zone is the same one from yesterday that I gave you, 45.16. Support zone, still 44.90, right? I really do not expect the charts to collapse. I don't. I could be totally wrong, but I'm going to buy the dip today until and unless it loses frontline support and then fails to recapture. For the Qs, for the NQ, this one has been very good to me. I've been trading the NQ since I got back from Tokyo, and I find it to be quite lovely. I'm sort of, I really like it. I really like it. So, and sorry, that is a kid line from a movie that I watched a long time ago. I'm very sorry, that slipped out. So here's what we're looking at. See all the higher lows here? And all the deep dips that immediately recover. Do not expect that a breakdown is not going to bring you buyers to the fore, because it will. Too many people are short too early in the game. It's going to take a while for the paint to dry and for things to really start rolling over, okay? But I do see a lot of oil issues in the pre-market pulling back quite a bit. And so I think that's, I don't know what that's got to do with, but in the end of the day, the number to watch for the Qs or the NQ is we want to make sure that it holds 15,375. That's going to be that line that makes you go, oh, I'm up above there, I can buy. And then this sell zone at 15,500, that's the region that we really want to watch for. All right? Take care, folks. I know this was a long one, but so much to catch up on. I'll see you tomorrow.